If you came here today with only one dream in your mind, to make quick money, then maybe you are standing in the wrong place. Let me ask you a direct question. Answer honestly. Have you ever felt that the market is deliberately working against you? The moment you buy, the market falls. The moment you sell, the market shoots up. And you are left staring at the screen, thinking, why does this always happen to me? If your answer is yes, then you are in the right place today. Because today I am not going to give you any indicator. I am not here to teach price action patterns. Today I am here to give you the mindset that stops the market from defeating you again and again. I am here to show you the mental process that transforms a retail trader into a professional. This is what truly changes the game. Now let me tell you my real story. Not a fake motivational movie story, but a bitter, honest one. I was once just like you. Hindi, medium background, middle-class family, and only one obsession in my head. I have to do something big quickly. I opened YouTube and searched the same things everyone searches. Best intraday strategy, one-shot profit indicator, bank Nifty 1,000 points daily. Every video showed me dreams, and every loss smashed me back to reality. My first account blew up. I told myself it's okay, this happens to everyone in the beginning. The second account blew up. I said I got stuck at the wrong time. The third account blew up, and this time I went silent. One day my mother asked just one question, what happened to the money? I had no answer. That night I could not sleep. One thought kept repeating in my mind. If all this is fake, then how are some people consistently making money? That was the day my eyes opened to price action. The next day I made a big decision. I removed all indicators from my chart. The chart was completely empty, only candles. Honestly, I felt scared, like going into battle without weapons. But then I started watching the candles closely, very closely. Every candle, every high, every low, every wick, every close. And then I realized something. The market was speaking, and until now I had never listened. Indicators were suppressing its voice. Price alone was telling the truth. This is where real price action begins. Now understand this in very simple language. Price action is not a strategy. Price action is the language of the market. Just like you understand a person not by their words, but by their body language. The market is understood not by indicators, but by price behavior. Every candle is an emotion. Every breakout is a fight. Every fakeout is a trap. Every consolidation is the moment when the market is catching its breath before the next big move. Until you see the market like a living being, you will never become a trader. You will only become a button-pressing machine. Now understand the real truth about candles. The green candle you see as profit is actually the story of buyers winning. It tells you sellers lost at that moment. A red candle is not just loss, it is the story of sellers winning where buyers got scared. An upper wick tells you the market tried to go up but failed. A lower wick tells you the market tried to fall but buyers defended it. Every single candle tells you who won, who lost, and who tried but failed. Now imagine if someone learns to read this battle between buyers and sellers, understands emotions, recognizes traps. How can the market defeat him again and again? Remember this. Indicators show you the result. Price shows you the reason. The day you start understanding the reason, the market stops defeating you. That is the day you truly start becoming a trader. Now let's talk about the place where most money is made and most accounts are destroyed. Support and resistance. Support is not just a line. It is the place where the market says, not anymore down. Resistance is not just a line. It is the place where the market says, not anymore up. But what does retail do? Retail buys at the breakout and professionals sell there. Then retail asks why the market reversed. Because the market knows how to trap you, and you do not know how to read it. Retail buys every green candle, sells every red candle, trusts every signal blindly, gets angry after every loss. Professionals wait for confirmation, trade at levels, play for big targets with small stop losses. Retail trades every day. Professionals wait for opportunity. Retail focuses on quantity. Professionals focus on quality. Now listen to the truth. The real enemy is not the market. The enemy is your own mind. You think the market defeats you. In reality, you defeat yourself. Fear says don't take the trade. Greed says put all the money in. Ego says I cannot be wrong. Overconfidence says I am an expert now. And the result is always the same. The market does the same thing every time. You make the same mistake every time and still expect a different result. That is the true definition of madness. One loss does not destroy your account. One loss destroys your confidence. 2 losses create doubt. 3 losses push you into revenge trading. The 4th loss makes you hate the market. That is where 90% of people quit. Let me ask you something. When you were learning to walk, did you stop after falling once? No. Then why do you give up so easily in trading? And this is where I stop you. If you still think this is just motivational talk and you are waiting for a strategy, then understand this clearly. You are still trapped in the retail mindset. A professional changes his thinking first, then his chart changes. Now we are slowly entering that zone where real price action begins. Where the market is not seen, it is read. Listen carefully now. By now you should clearly understand that the market is not your enemy. Your enemy is your impatience, fear, and greed. What I am about to share next will not make you a button presser. It will make you a thinking trader. Let me ask you an honest question. When you take a trade, what do you look at first? Most people say indicators. RSI, MACD, supertrend. But here is the bitter truth. If you did not first identify the trend, you fired a shot in the dark. Trend is very simple. The market is either going up, going down, or moving sideways. That's it. Uptrend, downtrend, sideways. Where does the real mistake happen? The market is in an uptrend and people look for sells. The market is in a downtrend and people look for buys. Then they say the market cheated them. No, you fought against the trend. If you swim against the waves, you will drown. If you swim with the waves, you move forward naturally. Trend is that wave. Now how to identify the trend? Very simple. Higher highs and higher lows mean uptrend. Lower lows and lower highs mean downtrend. If price moves in a range, it is sideways. Ask yourself honestly, how many times have you clearly identified the trend before entering a trade? After trend comes market structure. Market structure means how price moves. Move, pause, move, pause. Traders who understand the pause enter cheaply and ride the next move. Now support and resistance again, but simply. Support is the floor. Resistance is the ceiling. If someone hits the same ceiling 5 times, will he hit it full force the 6th time? No. The market remembers. That is why levels matter. Retail buys near resistance and sells near support, then complains about stop loss. That was bound to happen. Now the truth about breakouts. This is where most people get trapped. Retail buys the breakout. Professionals wait for the retest. That is the difference between those who make money and those who lose it. Fake breakouts are retail graveyards. The market knows where retail will enter. It triggers those entries, hunts stop losses, and converts retail losses into professional profits. Before taking any trade, you must have 5 things. Clear trend. Strong support or resistance. Breakout or rejection. Confirmation candle. Small stop loss with a big target. If even one is missing, skip the trade. The market will open again tomorrow. Your capital may not. Stop loss is not your enemy. It is your bodyguard. Retail removes stop loss. Professionals decide stop loss first, then target. Risk-reward is the real path to wealth. You can lose more trades than you win and still be profitable if your risk-reward is correct. Overtrading is greed, not trading. Revenge trading is destruction. A trading journal is a professional's diary. Retail does not journal and then blames luck. If all this sounds simple, you are on the right path. Real trading is never complicated. Our mind makes it complicated. Now we go deeper. Smart money. Liquidity. Supply and demand. How big players trap retail? This is where the real game starts. The market is a game with 2 players. Retail traders and big institutions. Smart money moves price, retail chases price. Liquidity is money, and that money comes from retail stop losses. Where stop losses exist, smart money becomes active. Supply and demand zones are areas, not lines. Professionals buy cheap in demand zones and sell expensive in supply zones. Retail buys in greed and sells in fear. News does not move the market. Liquidity does. Indicators follow price. Price leads. You cannot force the market. You can only flow with it. Do not enter when the market is running fast. Enter when it pauses at a level. You do not need to trade every day. You need to learn every day. Discipline is the biggest strategy. Discipline means doing what you decided, even when your emotions disagree. Losses do not weaken you. They teach you if you drop your ego. After a big loss, stop, walk away. Come back with a fresh mind. You do not need daily profits. You need daily correctness. 1% improvement daily takes you where 90% never reach. Retail looks for jackpots. Professionals build consistency. YouTube shows cars and profits. Real professional trading is quiet, boring, and disciplined. The market does not care about your money. It cares about your behavior. If this message touched you, if you truly want to become a strong trader, subscribe now. This is not motivation. This is real trading truth. Now let's slow this down even more, because this is where most traders rush and lose everything. The biggest mistake retail traders make is believing that confidence comes from winning trades. That is completely wrong. Confidence does not come from profit. Confidence comes from knowing that whatever happens next, you will follow your rules. A professional trader is calm not because he knows he will win, but because he knows he will execute correctly. This is exactly what Mark Douglas meant when he said the market is a probability game. Any trade can win or lose. There is no certainty. The moment you accept that uncertainty, fear starts losing its power over you. Retail traders want to be right. Professionals want to make money. There is a huge difference. The need to be right forces you to hold losing trades. It forces you to move stop losses. It forces you to add more money to bad positions. And slowly, silently, it destroys your account. Professionals don't argue with the market. They respond to it. Think about this carefully. The market does not know you exist. It does not care about your analysis. It does not remember your last loss. So why do you take losses personally? The moment you personalize a loss, your objectivity disappears. You stop seeing the chart clearly. Every candle starts looking emotional. Fear whispers, what if it happens again? Greed whispers, this time put more money. And discipline walks out quietly. This is why mindset comes before strategy. Let me tell you something most people never say openly. Even the best traders in the world lose trades regularly. The difference is simple. They don't lose control. A losing trade is just a business expense. Nothing more, nothing less. Just like rent, electricity, or salary. But retail traders treat losses like insults. That emotional attachment is deadly. Now let's talk about patience, the rarest skill in trading. Professionals wait. They wait for price to come to their level. They wait for confirmation. They wait even when nothing happens for hours or days. Retail traders feel uncomfortable when they are not in a trade. They feel they are missing something. That fear of missing out pushes them into low-quality setups. Remember this line. Not trading is also a position. If your setup is not there, staying out is a winning decision. Every trade you avoid that does not meet your rules is money saved. Now understand how professionals look at charts differently. Retail sees candles. Professionals see behavior. Retail sees a breakout. Professionals ask, where is liquidity? Retail sees a reversal candle. Professionals ask, who is trapped? Retail sees news. Professionals see positioning. This shift in thinking changes everything. When you look at a chart, stop asking, where should I enter? Instead ask, where would most people enter? That is usually where traps are built. The market moves to areas where maximum pain can be created. That pain becomes profit for smart money. This is why Mark Douglas emphasized thinking in probabilities and edges. Your edge is not predicting the market. Your edge is executing a setup that has played out positively over a large sample size. 1 trade means nothing. 10 trades mean nothing. 100 trades tell the truth. If you judge yourself based on 1 trade, you will never grow. Now let's talk about consistency, because this is where the 2% separate themselves. Consistency does not mean winning every day. Consistency means repeating the same process regardless of outcome. Same entry rules, same risk, same behavior. Most traders change strategies after 3 losses. Professionals change only after data proves the edge is broken. Your job is not to catch every move. Your job is to protect capital and wait for high probability moments. Capital protection is respect for the market. Overt leveraging is disrespect. You cannot control the market, but you can control your risk. That control gives you psychological stability, and psychological stability gives you clarity. Clarity allows patience. Patience allows precision. Precision creates consistency. Now ask yourself honestly, are you trading to feel excitement, or are you trading to build skill? If you are here for excitement, the market will eventually punish you. If you are here to master yourself, the market will reward you slowly. Trading is not about charts. It is about behavior under uncertainty. It exposes your fear, your greed, your impatience, and your ego like nothing else. This is why most people fail. Not because they lack knowledge, but because they lack self-control. The market is the greatest mirror. It reflects who you are. If you are disciplined, it rewards discipline. If you are emotional, it punishes emotion. If you are patient, it gives opportunity. If you are greedy, it gives pain. Once you accept this, trading stops being a fight and starts becoming a flow. And this is where you finally begin thinking like the 2%. You stop chasing. You stop forcing. You stop proving. You start waiting. You start observing. You start executing. No noise, no panic, no revenge. Just process, probability, and patience. That is the Mark Douglas mindset. That is trading psychology. That is how professionals read charts. And once you reach this level, you don't need motivation anymore. You need discipline. Because at that point, trading stops being about money. It becomes about mastery. If you want, next I can, increase this even more to 3,000 words, turn it into a full YouTube script with CTA, or rewrite it in a more emotional or calm tone, adapt it for shorts or thumbnails. Just tell me what you want next, like, subscribe, and comment. I am ready.